The day is done. Well, that was fun. We lost support. We're breaking down from the diamond top, sort of. Although it would have been much better had we lost support back here and not waited an entire day to do it. But we did lose support, and we lost support at 75. We're actually in a pretty bearish range on the S&P. We may open lower tomorrow due to that. We've seen pretty persistent pressure on the top end of the yield curve throughout the day, although the dollar has dropped. Broad commodities up 15 BPS. Yields up across most of the day, kind of leveling out now, but the dollar back down around 137.77. That saw USD JPY trim back a little bit, but USD yuan still at 721. We'll probably see more FX pressure out of China on that front, maybe into the overnight session when Asian markets open. Oil up 144 BPS on the day, clawing back its losses from the end of last week. US equity indexes down across the board. ES 43 points, NQ 15, down 19, with the Russell gaining 55 BPS. Correlation on the 1 and 3 month pretty flat for today. A little bit of a drop in the forward returns on volatility, but we saw vol get crushed pretty hard. Cash VIX down 0.15, VIX 3 month down 0.07, but VIX futures down 1.2%. I don't think move is updated, but if it is, maybe it is. You know what? Maybe it is. If it is, bond vol's starting to pick up, which is cool. SKU's probably not updated yet. That's definitely not updated. Oh, we have a new week on our VIX, cash VIX correlation. We're now at negative 41.86% correlation. So still very negatively correlated, but it is turning around over the last 3 weeks pretty quickly. We've dropped over the last 2 weeks from 49.79 down to 41.87, or went up. I guess went up is the better way to describe that. So that's kind of interesting. And then looks like tomorrow we have pretty flat gamma from 50.60 right around here all the way up to a giant pile of calls at 50.90. I'm not sure if those are sold or not. They might be, but there are a lot of them. And then 50.60 is the first peak of put interest. I would say a failure of 50.60 is going to pretty readily put us at 50.50. And then from 50.50, not a very big drop down to that 50.30 range that is so important out here. 50.30 is kind of our long-term trend, I believe, on the monthly. So having the monthly close below the 50.30 level would signal a reversal going into the opening of March on the technical front. It's not a confirmed reversal, but it's the start of one. I believe that reversal would confirm at 58.53, so another $100 lower. But a decent move and a solid rejection off the upper trend on the daily, if nothing else. We would still be looking for support to form between 50.30 and 50.50. And that could indicate another move to the upside. So this range still very important to break to the downside. We'll see how that goes over the rest of the week. But both auctions, the 2 and 5 year printed tails today, bid to cover was pretty low. Given the short duration of those contracts, it's a bit surprising that there wasn't more interest. I know the auctions were quite large, but getting a tail on the 2 years pretty odd. And I think what that is more than anything else is an increase in inflation expectations in the near term. And we're seeing the 2 year at 4.72 at the end of the day here, up from 4.6 earlier at the auction, up from 4.5 before that. So yeah, definitely some nearer term rising inflation expectations. And, we'll get more confirmation of that with PCE this Thursday. I think that's about it. So thank you guys so much for tuning in, and I will see you bright and early tomorrow morning. Make sure that you have notifications turned on for Pickles Picks when I update them tonight. Later, guys.